Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, July 31. The year's 2018. Let's talk trading. How to make money trading part 2. As I was doing yesterday's video, I was thinking there's a few things I could have said or maybe should have said. And like said, the whole reason why I'm doing these videos is because somebody asked a question, have I made any videos that show how to make money trading? And I thought maybe it was a serious question, maybe they were just being funny. But and I decided to err on the side of caution and produce these videos in case they were being serious. So as I pretty much always mention and bring up, is the screen on money and risk management. But we're not going to beat that dead horse today. Let's look here. The pound yen for the month. Remember this 190 or 110.93 area right here? We were close to that yesterday. And you see where it is now? It shot up. In fact, it hit a really nice high there earlier in the month. We're near the end of the month, but it shot back up. In fact, it's the last day of the month. A few more hours in this month. And you can see here on the weekly, we broke above previous week's high. So just trading with the candle color at these lines, it's almost a no lose. And as you can see here, we filled all those gaps. Okay, it took us a couple of days from Sunday, but we filled all the gaps. Now, last week, I think we had one or two that didn't fill, but, when you're looking at, 25, 28 pairs or whatever it is, statistically, it's really in your favor to do that, fade that gap. So you can see here for the week, it gapped down. If you just stayed in the trade from the beginning of the week here, you'd be up, let's see. If you just jumped in at the open, you'd be up 95 pips. That's not too bad. And on the daily, breaking out of that high at the 111.15 area, I mean, you can see it here. Once again, trading with the candle color at the line. And we have some nice ranges today. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. A lot of action. Now, the thing about making money with trading is that you can't force it. You can't make that happen. So what you do is you pick a pair. Of course, you've already employed your money and risk management, so you know how much you're willing to lose each trade, and not a penny more. So now you pick a pair. Now you pick basically an entry method. Now that method may or may not tell you which direction to trade. So if you just want to make it really simple, you just trade with a H1 or higher candle color at a line. It can't be any simpler than that. I mean, you could probably teach a grade school kid. It's like, hey, if it's green, first time it hits a line, you buy. If it's red, the first time you hit a line, you sell. Put your stop loss on, and you see what happens. Because no matter what entry method you use, once you put that trade on, you don't know what's going to happen next. And see, that's the biggest hurdle, biggest mental hurdle for traders. Somehow they get confused thinking that they've got this method that's like a can't lose, can't miss method. But that's not the case. You see, each trade you put on is just one of a series. It may win, it may lose. And it doesn't, if you lose, it doesn't say that there's anything wrong with the method. It doesn't mean you need to tweak it. You have to maybe do it at least 10 times, maybe 100 times, maybe 1,000 times to see if that method works for you. And that's what these guys who like to do back testing. But, there's so many things wrong with the way people do back testing, and that's why I quit playing that game and I just do statistical analysis. Basically, did I have a chance to make money? That's simple. That's all I need to know. Because if I have a chance to make money, then, it's up to me to take it when I can. So just remember that when you place that trade, that's it. You just got to sit back and see what happens next. Maybe you win, maybe you lose, but just keep going and see what happens. If something's obvious, like you do like 4 or 5 trades in a row, and every time, within a minute or two, your stop loss gets taken, maybe you might need to reevaluate that method. Maybe you might need to pick a different pair because whatever that's just not working. Maybe you have to go back and maybe you got something wrong in your calculations or in the code, and it's telling you to buy when you should sell or sell when you should buy. And the thing also about the gut feelings, I mean, if you do that, if you trade, gut feelings, seat of your pants, as we call airballing, you're not trading, you're gambling. Now, what's the difference? See, when you trade, when you make a trade based on statistics, then you're taking a calculated risk. When you just randomly trade, flip a coin or whatever, then it's the market. So, if you're not preparing anything to place a trade, then you're gambling. If that's what you want to do, that's okay too. Because the market will pay just as well as it takes. And somebody could gamble and they could be good at it when it comes to trading. And then I can't take that from them if they're good at it. But I don't think most of us are that good. Because if you were, you probably wouldn't be watching my video, right? Let's just be real. But doing something just really simple, trading with a higher time frame candle at that horizontal line could pay off repeatedly. Right here, we've got, you jumped in the buy zone there, and then, okay, that would have been a loss, either here or here. Then if you jumped in here, that would have been a loss either here or here, right? And if you jumped in here, there's possible profit. And if you jumped in here, there's a profit. And if you jumped in there, there's a profit. You jumped in there, there's a profit. And if you were a pro trader, you might have taken one of these two. And once again, there's profit. See here, fading the pivot right there. Since the pivot was so close, if you jumped in, probably the spread at that time was you might have been buying the pivot. And if that were the case and it pulled up and started coming back, you would have exited. So you can see here, some people go, yeah, see, you just lost and you lost and you lost. Yeah, but then you won, you won, you won, you won. So that's why you have to maybe do at least 10, if not 100 trades before you say it doesn't work. Because, see, it's not that it works or not, it's just whether or not the market paid out that particular time. It's not that difficult, but you see, you've got to get your mind right, as we talked about was it last week or the week before? We talked about cool hand loop trading or something like that. Because if you don't, then you're just not, it's just not going to be profitable. And you can see here, we've got red rat zone happening. So this is Randy real time, as opposed to Harry hindsight. So you can see here, there's an opportunity to go short on dollar yen right here. Now, since it's so close to the 112, I would think there might be a push to hit 112. But then again, have been tracking the yen for years. So if you go short, be careful. That's all. It might not hit 112, but once again, you have your stop losses in place and you don't really have to worry about it. You can see here we busted through R4. It's probably somewhere R5 or R6. And you can see here we took out the pivot. Oh, look what other pivot got taken out. Remember this pivot? You've been talking about it for the past 1, 2, 3, 4, 5 days. You see how that took out that pivot? So that was something I was looking for. And remember, before this one, there was this one. And we were up here. I said, you know what? That pivot needs to get covered. And then this pivot needed to get covered. And it has. So, but of course you can say, but what about these? Well, nothing's is really going to be 100%. So once again, obviously, you would have put in some stop losses so you wouldn't be down by hundreds of pips, right? So fading the pivot, once again, can be profitable. And price action, 3-ball at the bottom, green at the line. Ooh, we've got a 3-ball at the top. Looking for red at the line here. Red at the 111.90. Randy real time. And we're going to beat the dead horse. H1 candle color at the line. Try and get in at the first line it hits. And you can see it would be profitable. Even here, hit that line. And that was green at that line, pulled back. Wick zone. Yeah, I'll say it. Price doesn't like staying in the wick zone. Oh, gotta laugh. There you go. Holo trade right there. 111.93 was a short trigger. And you can see just the oscillation here on the tick. Some nice trades here. This short you would have lost. But then turn around green at that line, would have won. And there was a short trigger, but the question is, that was an H1, so we need to switch time frames. So right there was an H1 short, and inside there we had a M15 short trigger. And the old daily, weekly, monthly, open, high, low, current, and previous. And you can see here busting through the weekly high, previous week's high, previous week's open, putting in a new daily, weekly high right there. And the Einstein line right here since I started. And you can see here, there was short trigger. Never hit the long trigger. We got a short trigger right there, short trigger. So, fellow traders, just remember, you put that trade on. After you do, you just have to sit back and wait. You can't force a win because it's not what you trade, it's how you trade it. Get out there and drain the banks. Hope you had a great month.